So what are a couple of growth ETFs to watch right now? And what are a couple of dividend ETFs to watch for right now as well?
Oh, okay. Yeah, that's an interesting one actually. Let me pull up my chart again here, and we can look at kind of what's happening. And I'll share my screen. Oh, let's see here. All right, so we've got here's one growth ETF. So keep in mind that actually in the year to date, really the growth section of the market has not done that well. You can kind of see that here. This is an iShares it's exponential technology. This is a really cool exchange traded fund that has a whole mixture of different exponential technologies, even in healthcare area and what have you. But you can see, the biggest gains came, prior to this year. This is the beginning of this year, and it's a ticker symbol's XT. But we currently have this in the portfolio, and we've made some money. We bought it, in this time frame. But one of the things that I watch for really is just kind of breakout. So if I draw a little trend line there, you can see, hopefully, see that little red line there. So theoretically, this thing has potential to break out above this line, and you could see a nice run there. And it's actually held up pretty well overall when you look at all of the different growth funds out there. So that's one we have in our portfolio and in our model right now. And then there's another one here I can show you. This is XITK, and this is Spider, which is State Street, one of the big money managers out there. And this is again an exchange traded fund, and this is a innovative technology ETF also. Now you can see that one again had huge run. Peaked out here. The 12th of February was the peak for most of these things. And we still own this, not in our models, which we use in our IRAs, but in our taxable accounts, just because we still have such a huge gain. But I would put it in my models, especially if it breaks out. And you can see here on this trend, it's right there right now. So if this thing breaks out, it's got a lot of overhead resistance. See this big block of shares that was purchased here. It's going to make it hard for it to go because everybody that bought here might be looking to get their money back, right? If they bought it down here and it runs back up, they might say, okay, I'll take it. But you can see if it ever gets through this level, which would be a really good buy area right here, because there's virtually no resistance above that because there weren't that many shares traded there. So this is one I'd be watching also, XITK. I think it's worth looking at. It's now above the 200-day moving average. The 200-day moving average is going up, etc. So there's some potential there. Uh, I don't do a lot of dividend pieces, but one that I've been watching a lot is this one here. This is iShares. Again, iShares is actually owned by BlackRock, which is a monstrous money manager. This is called Select Dividend, ticker symbols DVY. You can see this is actually a totally different chart pattern than both of those. Went sideways, for most of last year because everybody last year was buying growth stocks. And you saw that in those other two charts, right? I mean, there was a huge run up through here. But all of these took off on the 9th of November. See that big jump right there? And so the 9th of November was when Moderna announced their initial results from their phase 3 trial, which was very, very positive, and it turned out to be a really important time frame. And so dividend stocks tend to be kind of those value stocks on the other side of the equation. And a lot of these stocks are stocks that were beat down because of the pandemic. And so you've seen just a phenomenal run, very strong, way above the 200-day moving average. But this is a decent dividend stock. I don't buy things just for dividend, because you can get a 5% dividend and lose 10% on the price. The price is much more important to me than the dividend, but this would be one that I'd take a look at as far as that goes.
So, what kind of companies are in dividend ETFs? Like, what are value companies?
Well, okay, so generally speaking, when you're growing really fast as a company, you're putting all of your money into that growth development. Maybe you're buying other, growth companies or what have you. And so you don't really have money to pay a dividend. Oftentimes, when you see a dividend, it is either from a more established company, like Apple now pays a dividend, Microsoft pays a dividend. They're not huge dividends, but what you're normally seeing in this dividend arena and really what's kind of running here is what's called a value stock. So value stock is just essentially a stock that is selling for, relatively inexpensive compared to its earnings, whereas a growth stock can be quite expensive compared to its earnings, but you're hoping that it continues to grow really fast. And so you'll see a lot of value stocks pay dividends. And one of the reasons they pay dividends, and sometimes they pay fairly big dividends, is just to attract investors. So AT&T was paying a pretty high dividend, roughly 7%. And then they cut it by 40% a couple of weeks ago in a deal that they were doing to spin off, their Time Warner purchase. And their stock dropped, I think it dropped about 40%. And again, because people were buying that for the dividend. And so if you're going to oh, sorry, the dividend was cut by 40%. The stock dropped, pretty dramatically, but they were buying it for the dividend. And so that's a problem, but that's what you'll see in here. So, kind of industrials, your GEs of the world pay nice dividends, AT&T, older companies that are trying to attract people to their stock will pay a lot more dividends. And so, obviously that's been an area that has really improved as the economy has started to reopen or even thought about reopening, which started on 11/9 when that announcement happened. If you go through all of these value portfolios, you'll see this big jump here, and you'll see a similar pattern of gains that come from that point forward. So yeah, that's kind of what you're seeing in there.